All right, so the first problems you want me to go through are Module 8 distribution problems. Let me pull up those problems. Was there a specific problem you want me to do, or do you want me to...
Just a comprehensive rundown.
Comprehensive rundown? Okay. Let's just go ahead and start with problem 1. Now, I have YouTube videos for all these problems in the modules, so you can go through each of them. I'll kind of give you the summary of each question. That way it's a little bit faster than it is that we did in class and also on YouTube. So remember that problems 1 through 5, they all focus on the same problem, Kiwi and Fruit Sushi Inc., right? And they change up some stuff. The main thing is the earnings and profits changes up. So problem 1, you've got corporation shareholder. The shareholder has $24,000. For this exam, it doesn't really matter what the corporation does. It's just important that you note what's going on in the problem. Okay? So we have a corporation, a shareholder. In the first year of existence, the corporation earns $30,000 of earnings and profits. The earnings and profits are earned equally throughout the year. On July 1st, the first year, Fruit Sushi, the corporation, borrows $50,000 from Big Apple Bank and distributes $40,000 to Kiwi. What are the tax consequences of the distribution to Kiwi and the corporation? Okay, so first step on any problem on the exam, you want to determine which topic it applies to the problem. Right? There's Module 6, formation, Module 7, operations, so you got dividends received deduction, organizational expenditures, things like that. Module 8, you have distribution and redemption. And in Module 9, you have liquidation. So this problem, we're told the corporation distributes $40,000 to Kiwi. Okay? Also important to know it's $40,000 cash. Now, remember, now that we've gone through all the material, Module 6 through 9, whenever there's a distribution, it can either be liquidating distribution or non-liquidating. The way you know it's liquidating is you need to be told, hey, is the corporation liquidating at any point? In this problem, there's nothing that suggests they liquidate, so it's not liquidating. So it's a Module 8 issue. Okay. So remember, we have 4 steps. So we know this is a Module 8 distribution problem. Once you know that, you say, okay, I have to apply the knowledge, or apply the steps, Module 8 distributions. There's the 4 steps, right? Step 1 and 2 deal with the corporation and adjusting current E&P. Now remember, think about shortcuts for the exam that can help you. If it's a cash distribution, which it is, right? It's $40,000 cash. You can pretty much just skip step 1 and 2, right? No consequences. Why? Because it's a cash distribution. So that leads us to step 3, right? Consequences of the shareholder, which is usually where most of the time is spent on these problems.
How common in practice is step 1 and 2?
How common in practice?
Mm-hmm.
You have to do that because to determine the effect of the shareholder, you need to know what their E&P is. So you'd have to adjust the E&P for the year by the amount of any gain on the transaction. And also the taxes, but we're not doing taxes. So that adjusts your E&P for you. So that's the main reason why you do it. That and because if you're determining the consequences of the corporation. Now, in practice, you're usually doing the tax consequences to one of the parties. You're not doing both, right? Unless you're dealing with a shareholder that owns a corporation, like a sole shareholder. So you might be doing the tax return 1120 for the corporation, and you just would be doing step 1 and step 2, and maybe step 4. All right. So here's number 1 again. I wanted to give us some room. So step 3, we're looking at the consequences of the shareholder. Remember, we have 4 sub-steps. Sub-step 1 is determine the amount of the distribution. The formula is the amount of cash received plus the fair market value of the non-cash property received minus any liabilities assumed. Well, all we have here, Kiwi, right? Kiwi is a shareholder. Kiwi has $40,000 of cash. So the distribution is $40,000. Okay. Part 2 of step 3 is the EMP analysis. So remember, for EMP analysis, I always set up accumulated EMP on the top because chronologically, right, and current EMP. Remember, EMP is like retained earnings. We're trying to determine what portion of the distribution is dividend, then return of capital and capital gain. Accumulated EMP is 0 because this is year 1. Current EMP is given to us $30,000. So when you have positive and positive accumulated and current EMP with one owner, you can add them together and you get 30,000. So then we go to step 3. Step 3 is the waterfall. So we take the distribution from part 1. I said step 3, sorry. Part 3, waterfall. We go down the waterfall. Our first stop is dividend to the extent of earnings and profits. So we've got 30,000 EMP, right? Move that over. That means the first $30,000 is a dividend. Remember, the waterfall all needs to add up to distribution. So the next level is return of capital. And for that, we need the adjusted basis. Adjusted basis given to us is 24,000. And we say 40,000 minus 30,000 is 10,000. Is 10,000 enough to be covered by the basis? Yes. So the next $10,000 is return of capital. And this reduces our basis afterwards from 24 minus 10 to $14,000. Finally, step 3 is capital gain distribution, which is whatever is left over. Which is 0. Because 30 plus 10 plus 0 is 40. And that's the consequences of the shareholder, right? The only other consequence is step 4, which is the adjusted basis, which when you have a cash distribution always equals the amount of cash. That's step 3. I can do step 4 over here, real simple.
So you just do equals cash equals
Yeah.
40,000.
Exactly, 40,000, yeah, because the basis, remember, in cash is always equal to the face value. So step 4 is to adjust accumulated EMP for next year. So we have a 4-part formula. Accumulated EMP given to us in the problem. Current EMP given to us in the problem. Plus any step 2 gain. If you want to think of it as step 1 gain, that's fine as well. Minus distribution adjustment. So accumulated EMP given to us is 0. Current EMP given to us is 30,000. Plus a step 2 gain, which is 0, right? Because step 2, right, we did that earlier, was no consequences because it's a cash distribution. Finally, the distribution adjustment. Remember the general rule? The general rule for distribution adjustment is the amount of the distribution to the corporation that resulted in a dividend to the shareholders. So we only have one shareholder, We're just focusing on this amount right here, which is $30,000. Therefore, if we net all these, we get 0. So the accumulated E&P for next year is 0. Now remember that the distribution adjustment has a special rule. The special rule applies when you have property being distributed where the adjusted basis is greater than fair market value, which we have cash distribution here, so that's not going to be the case. And that is problem 1.
Wait, what did you say the rule for distribution adjustment is?
So the general rule for distribution adjustment is the amount of the distribution that's a dividend. So you just go back and you look at step 3 and you add up all the shareholders' dividends. However, there's a special rule that applies when the adjusted basis of the property distributed is greater than the fair market value. So because it's a cash distribution, you don't have property, so you don't worry about it. So you only worry about that rule when you have property. And the rule is you take the adjusted basis, not the fair market value. So we'll see that in problem 6 and 7. Any questions on problem 1? So on the exam, as you see in the quiz, it asks for specific things like what is the distribution, or what is the distribution amount to Kiwi during the year? Or what is the amount of dividend to Kiwi? What's the amount of return of capital? What's the amount of capital gain distribution? What's the basis after the distribution? What is the accumulated E&P of the corporation next year? Those kinds of questions. Okay? So on the
Borrowing doesn't matter.
Huh?
The borrowing doesn't matter.
Yes, good point. So remember that the corporation borrowed money. That has no effect on this transaction, the consequences to Kiwi or the corporation. So we can pretty much just ignore that.
Oh, I see. And that's how you know. I see. Fruits is how many kiwis.
So on the exam, you might get this type of problem with either one question or two questions. Let's say you get one question. Let's say I ask you, how much dividend does Kiwi have? You would want to go, you have to do the steps in order. Step 1, step 2, because that's going to affect your current E&P, but you know it's cash distribution, so you skip right to step 3. You then determine the amount of the distribution, which is $40,000, right? Our formula is the amount of cash received plus the fair market value of non-cash property minus liabilities assumed, but you know it's just cash. So it's $40,000 cash. Then you do the E&P analysis, part 2, right? You get $30,000 E&P because it's one owner. Then you go to part 3 and you say, okay, I just need to determine how much of the $40,000 distribution is dividend. So all you're going to say is, okay, $40,000 distribution, $30,000 E&P, $30,000 dividend. I got my dividend. I put my answer. I move on. Don't worry about all the rest of the stuff. You waste your time if you're doing other things. Now, if you get a question that asks for 2 questions, maybe it asks for the dividend and the adjusted accumulated earnings and profits for next year, you continue with step 4. But you don't need to do return of capital or capital gain distribution at that point because it's irrelevant. Has no impact on step 4. Everyone see that? So if I asked you on the exam, this problem we just did, what is the dividend amount? It'd be $30,000 and you don't have to do below number 2 and number 3. And if I also asked you, what's the accumulated E&P for next year? You could do this step 4 without finishing step 3 because you'd have $30,000 of current E&P, which are given to you in the problem. There's no step 2 gain because remember step 2 doesn't apply when there's cash. Distribution. Distribution adjustment is only the amount of dividend because it's going to be the general rule because there's no property. So you don't have to waste your time on the return of capital or capital gain. All right.
For step 4 on part 3, when you write AB equals cash, what would, like if you ask that as a question, you just write in
40,000 basis. Mm-hmm. That question is more for what's the basis of property what's the basis of property received? So like if you receive land and it always equals fair market value, that's more what that question is designed for, or that part. Okay, number 2. So number 2, we're continuing on. And fruit sushi, kiwi. Now we're going into year 2. Year 1 changes. So again, all these are independent, but the same idea. So year 1, we have a $20,000 loss. Sorry. Right, first year, a $20,000 loss. Second year, we've got $24,000 of EMP, and we distribute $15,000 of kiwi, earned equally throughout the year. So now we go through our steps. It's a $15,000 cash distribution to kiwi, so we can skip step 1 and 2, right? We can ignore those 2 steps. So we go right to step 3. So step 3, we have 4 parts. Part 1, the distribution amount. We know our formula, cash plus fair market value of non-cash property minus liabilities. It's going to be the $15,000 distribution. Part 2, EMP analysis. We do accumulated EMP on top chronologically, current EMP. Now remember, this current EMP is adjusted after step 2, but we have yet to adjust because we've been dealing with cash distributions. So the accumulated EMP is what's given to us. It's negative $20,000, right here, year 1, rolls over next year. Current EMP is positive $24,000. So remember, the rule is if you have negative accumulated and positive current, we're going to ignore the accumulated EMP. So what do we have for EMP? We have 24,000 EMP. So then we go to part 3, our waterfall. One is dividend to the extent of EMP. So earnings and profits. All 15,000 is dividend. That means that number 2 and number 3, our return of capital or our capital gain, are both going to be 0 because they have to add up to $15,000. Part 4, remember, adjusted basis of the cash is the amount of cash. Because again, cash can never have a basis different than its face value. So we go to step 4, accumulate EMP for next year. Accumulate EMP given, plus or minus current EMP given to us, plus any step 2 gain. Again, you can think of that as step 1 gain if you want, minus the distribution adjustment. So the accumulated EMP is what's given to us. It's negative $20,000. Current EMP is a positive $24,000. No step 2 gain. Distribution adjustment, when it's cash, remember, is always going to be the amount of the distribution as a dividend, and that's going to be the $15,000. That means our accumulated EMP next year is going to be negative $11,000, and that's our answer, and we're done with problem 2.
And you just have the error there just to say that the dividend, there's current EMP, which means we can...
Yeah, up to 24,000, exactly. So if the distribution was 28, you'd have 24 EMP, so 24 dividend, 4,000 return of capital, and reduce the basis.
Okay.
Do you have a question?
No.
Okay, just want to make sure.
So on when we're doing the current EMP given here, so it's 24,000. Is it the 24,000 at the end that we did, or the one that's in the, like, you know how you crossed out the 20,000 with the 24 right there?
It's just this. It's the one given to us in the problem, so it's the one up here.
Okay.
This should be, sorry, this is Yeah, this is just EMP. We just call this 24,000 EMP here. This is current EMP. This is just like total EMP
Okay.
for purposes of part 3. Yeah, it's the one here, not the one here.
Gotcha, okay.
You're using this. It's just that the rule is negative accumulated positive current. You ignore the accumulated that's negative.
But that's the one it's asking for down here.
Yeah, it's asking for this one. Well, it's asking for the one in the problem because this could technically be adjusted after step 2. This one's adjusted after step 2, but we don't have any adjustment because it's cash.
Okay, so just like the problem.
Yeah, exactly. So look at the problem because these are the ones that are given. Then you adjust for step 2, and then you do that.
Thank you.
Mm-hmm. Yeah, you can take pictures of whatever you want. That's fine. Mm-hmm. And if you don't get something, just let me know, and you can take pictures after class too. I'll keep it up here.
Oh, no, I got it. Yeah, thank you. Okay, thank you.
All right, problem 3. So problem 3 is where it starts getting a little bit more involved. So problem 3, we're continuing on. Now we got 2 shareholders, Kiwi and Strawberry. Kiwi sells her shares halfway through the year. We're told what accumulated current EMP is. We've got some transactions going on during the year, some sales of stocks and distributions, all that stuff. I'm not going to draw out the timeline for you like I did last time, but I recommend if you ever have a question on the exam, my exam, CPA exam, that involves stuff like this, it helps to draw a timeline and understand what's going on. Okay? So you're welcome to look at a YouTube video, your notes before to draw the timeline. But the idea is that we've got some events going on. Okay? You know, I'll just do it. This is what you see. April 1st, Kiwi gets $40,000 distribution. July 1st, Kiwi sells half her shares of stock for $50,000 to Strawberry. 12/31, Kiwi and Strawberry both get $20,000 distribution. So again, first thing you're doing on this problem in the exam is determining, hey, it's distribution, there's no liquidation, so it's modulate distribution. It's all cash distributions, right? You got $40,000 April 1st, $20,000 December 31st. So it's all cash, no step 1, no step 2. We move right to step 3. Step 3, we determine the amount of distribution. We've got Kiwi, we've got Strawberries, so we're going to have total amounts. Kiwi gets $40,000 here, $20,000 here. Kiwi has a $60,000 distribution during the year. Strawberry just has $20,000. Total is $80,000. There's only cash here. There's no liabilities. There's no fair market value of non-cash property. So you're just using the cash amounts. Remember, that's the distribution formula. Okay. So that was part 1, the distribution amounts. Part 2, EMP analysis. This is where we go in a lot more depth. So remember, whenever you start off with E&P analysis, always do accumulated E&P on top, chronologically, current E&P on bottom. So the accumulated E&P given here is 36,000. Current E&P is 24,000. If we have positive and positive current accumulated E&P, and there's two or more owners, we've got some special rules. Well, not special rules, but just ways to proceed. If we have enough E&P, if we add these two numbers, right, we get $60,000 of E&P. If we have enough E&P to cover the distribution, we're good. Everything is just dividend, right? So if distribution, total, right? Total distribution is less than or equal to total E&P, then all dividend. It's easy, right? All the distribution is dividend. That makes it a lot easier. We don't have that here. We have $80,000 of distributions. We only have $60,000 of E&P. So we have an issue. That's when we have to do these crazy allocations. Because basically we're saying you have $60,000 to allocate over $80,000. It's not enough to allocate all to it. So therefore we're going to have to prorate some way. Prorate some way. Okay? It's all about ordering how you do this. If you go out of order, you will get things wrong. Start with current E&P first. We start by allocating current E&P first. It's always where we start. So we have current E&P of 24,000. We need to allocate that over kiwi and strawberry. Okay? So the way we allocate is based on distribution over total distribution. We know our total distribution amount is 80,000. So we have three key dates. We've got April 1st, 12/31, and 12/31. 3 dates of distribution, right? Well, same dates, but to do two different people on 12/31. So April 1st is the kiwi. December 31st is also kiwi and also to strawberry. The amount of the distribution is 40,000 here, 20,000 here, 20,000 here, again, giving us a total of $80,000. So the rule is we're going to take the distribution on that date over total distribution. And we're going to allocate the $24,000 of current E&P given to us. So we're just going to go ahead and do that. Distribution amount is 40,000 over total 80,000. This is 20,000, right? This number right here over this number right here, 80,000. This is 20,000 over 80,000. We get 12,000 allocated there, 6,000 allocated there, and 6,000 allocated there. And if you add these up, you'll get 24,000, and we've allocated that out properly. Any questions on how we allocate current E&P? And by the way, they make you do this on the CPA. I mean, you can probably look at it and just see, okay, there's 80,000 total. This one has 40 over 80, so it's 1/2. This one has 20 over 80, so it's 1/4. And this one has 1/4. So you probably just take those and do simple math on a sheet of paper, but I do the full approach for you. No, that's just the current EMP that gets allocated. Of the 24,000, you're going to allocate 12,000 to kiwi, 6,000 to kiwi, 6,000 to strawberry on those specific dates. We still got to do accumulate EMP. Okay, next we do accumulate EMP. In order, you have to do an order. Accumulate EMP, the rule is it's FIFO, first in, first out. But the idea is that you can only go to the extent it fills up the distribution to the full amount of the distribution. You can't go any further than that. You can't go beyond that. So again, we've got the 3 dates, the same 3 distribution amounts. That's still the same. So 40,000, 20,000, 20,000, right? Kiwi, kiwi, and strawberry. And again, it's identical to this up here. Our accumulated EMP given to us is 36,000 starting. Sorry, take that away. So you can only go up to the extent it makes $40,000 in the first distribution date on 4/1. So 40,000 minus 12,000. It's 28. We've got 36,000 in the beginning. So we do 28,000 to fill up because 36,000 is enough. That leaves us with $8,000 of EMP left over. Of course, 20 minus 6 and 20 minus 6 is 14. So you need 14 and 14, 28, but you don't have enough. So we're just going to basically allocate the remaining $8,000 so we have 8,000 left after the April 1st distribution. The $8,000 left, we're going to allocate. And the reason why we're doing this is because it's FIFO. You go in order of the dates, right? April 1st, but then these two are on 12/31. And when you're between the same dates, the rule is allocate based on distributions on that date. $12.31 to kiwi, $12.31 to strawberry. So $20,000 each. Got $40,000 there. Again, the rule is we're allocating based on the distributions on that date. A similar formula like we have here, but with respect to just that date. So if this was 30-10, you would take 30 over 40, 10 over 40. 30,000 over 40,000, 10,000 over 40,000. But it's going to be 20K over 40K, right, total, and also 20K over 40K. We're going to multiply that by the $8,000 we have to allocate. They each get $4,000. Okay? They each get $4,000 of that allocated to them. So it goes here and here. So now we have all the E&P allocated. We've got the current E&P of $24,000 allocated 12, 6, and 6. We've got the $36,000 of accumulated E&P allocated 28, 4, and 4 based on dates. So now that we have that breakdown, we can go and we can do part 3, the waterfall. Actually, I'm going to need more room than that. So remember, 3-part waterfall is the first is dividend to the extent of earnings and profits. Second is return of capital. And third is capital gain distribution. We've got the 3 dates. We've got the distribution amounts, I should say. 401 to K. 1231 to K. 1231 to S. And the amounts of distribution we've determined already earlier in the problem. $40,000. $20,000. $20,000. So it's dividends to the extent of earnings and profits. So again, you're looking at, on 4-1, you've got 12,028. It's all 40. For 1231 here and 1231 here, you've got 6 and 4, 6 and 4. So 10,000, 10,000 dividend. So this, of course, is going to be 0 and 0 because we have enough to cover that transaction right there. So that means our adjusted basis remains $24,000 after step 2, which is when you calculate the new basis. Or sorry, not step 2, the second level of the waterfall. Okay? So the problem is on 1231 and for 1231 K and S, we've got another event going back to our timeline. on 7-1, sale of stock from K to S.
It's like gonna rain. I thought I just heard thunder.
Uh-oh. So we have a sale of stock from K to S, right, for $50,000 for one half of the stock. We got to do the consequences of K. So the amount realized minus the adjusted basis. Amount realized K receives $50,000. Adjusted basis of the property given up. You look here.
12,000?
Yes, 12, exactly. One half of the 24,000 left. So that's 12,000. The stock left over after that distribution. $38,000 capital gain. And the adjusted basis left to K equals $12,000. Consequences to S. S has a $50,000 adjusted basis in stock. So here this is going to be, you've got an adjusted basis of $12,000. So of course we have enough. We have 10,000. That brings the basis down to 2,000, right? Remaining. This will be 0. And Strawberry has an adjusted basis of 50,000. So we've got 10,000 more. Brings the adjusted basis down to 40,000. Capital gain distribution 0. So if you add all these up, right, 40 plus 0 plus 0, 10 plus 10 plus 0, 10 plus 10 plus 0 equals the amounts above, and we're done with step 3. Or, sorry. The only other part of step 3 is the adjusted basis equals the amount of cash received, and we're done with step 3.
What is the total amount of cash received? Sorry, just don't want to
Kiwi has 60, Strawberry has 20.
I see.
I'm not going to ask you that on the exam. I mean, I'm only going to ask you the difficult questions, like what the CPA exam would ask. But the basis is just whatever the basis of, or what the fair market value is. I'm just trying to stay consistent with the steps.
Yeah, David. I know, I couldn't find my notes too. But I guess it's too easy. Okay, I'm just gonna have to get up and ask, 'cause this is super difficult. Are these aren't minus signs, are they, right? You're subtracting.
I'm subtracting out the current EMP to get the amount left over for the accumulated EMP to come out, because you can only go to the extent of your whatever current EMP has already been taken into account.
I got you.
So if you have $40,000 distribution, you have to subtract away the $12,000 of current EMP that's already been allocated to it, because the accumulated EMP only gets allocated after current EMP. So that's why you're subtracting that away. You're saying, okay, 40 minus 12 is 28. So you can go up to $28,000. So 36 to to 28, you have enough. So after you've allocated 28, you have 8,000 left. So then you have a distribution on the same date, and then you allocate based on the amount of distributions that date. Step 4 is the accumulated EMP. For next year, you take the accumulated EMP given to you in the problem, the current EMP given the problem, plus any step 2 gain, which if you want to think of it like step 1 gain, that's fine, minus distribution adjustment, which remember it's a cash distribution, so it's always just going to equal the amount of dividend that you've recorded by the shareholders. So the accumulated EMP given to us is 36,000 positive, right? Current EMP is 24,000 positive, plus step 2 gain minus distribution adjustment. The distribution adjustment and cash distribution equals the amount of dividend to all shareholders. So 40,000 plus 10,000 plus 10,000 is $60,000. The special rule for distribution adjustment only applies if it's a property distribution when the adjusted basis is greater than fair market value. So we have no accumulated EMP for next year, which makes sense. You've used it all up. And that's problem 3.
Sorry. Didn't think about that.
That's a doozy.
So in the CPA exam, they might ask you how much of kiwi or strawberries, $20,000 distribution, probably they'll focus on kiwi, how much of the distribution on 12/31 is dividend, or how much is return of capital, that's probably what they do is return of capital, or how much is capital gain distribution. So you'd have to go through all of this, except for step 4. You have to do all of step 3. So you'd have to allocate out all the current EMP and accumulated EMP to get the answer. So they make you go through this whole
That'd
step.
be one problem. They would like.
That's
consider
one.
the
That's
next problem.
that's one multiple choice question on the CPA exam. Because they like to give questions that are objective. And this is objective
Yeah,
with tons of steps.
they wouldn't follow the problem through for all the questions though.
Not for multiple choice. They don't have multiple questions from a multiple choice question. It's all different fact patterns. For a simulation, they would, but usually simulations they don't ask like something like this. They ask more like, oh, they'll give you a fact pattern. They'll be, what happens if it's a corporation? What happens if it's a partnership or LLC? Like they do like that type of stuff.
What's
Like,
the simulation?
huh?
What's like a simulation difference from like a multiple choice?
They give you like a bunch of facts, but then they're like, what happens if this is a corporation versus what happens if it's an LLC? Huh?
And you fill in like a tax return.
Not for that question. For that one, you kind of just free shorthand answer the questions.
Oh, okay. It's a long response.
Yeah.
Okay.
They might ask you specific questions and be like, what would be the basis and the property received in this case or that case, if it's a corporation versus so they'll give you like a bunch of facts, but then they'll like change up stuff in the questions and they'll ask you for them below. But yeah, they do tax return, but not as much. They mostly do like they give you a bunch of facts and they say, what happens if it's a corporation? What happens if it's a partnership? Because they want to see if you know how to apply different situations, which tends to be a lot more confusing because you got more stuff. This one is just a lot, it just takes up a lot of time to do. That's the problem with it.
And the way you would post it in the, on the exam, you would ask a specific part.
Yeah. Yeah. So I might ask you how much dividend does K have, which is $50,000, right? 40,000 plus 10, $50,000. That might be what I ask. Something like that. How much dividend does Strawberry have? 10,000.
Okay, so if you ask that question, would you say at 12/31 or at the end of the year or?
Probably just for the entire year. So you'd add up both K's, $40,000 and $10,000 dividend, you get $50,000. That's probably what I would do.
So we know it's not asking for like the year.
If it did ask for like a specific date, it'd only be on the date of the distribution. But what's the dividend? I think I do ask like a
He
specific
does
date.
yeah.
Yeah, it's like what is the consequences of, if it's the April 1st one, the April 1st one's easy because FIFO, you're going to probably fill it up. So if you get the April 1st one, that one's easy. But the 12/31 one, you got to do all the analysis. Here's number 4, very similar to number 3. The main difference is there's 36,000 positive accumulated EMP, and there's negative current EMP of 32,000. So timeline's the same. So step 1, step 2, no consequences because it's cash distributions. Timeline's the same for strawberry and kiwi. The distribution amounts are the same, right? They received $40,000 kiwi on April 1st. Receive 12/31, 20, and 20. That doesn't change. What does change is when you get to step 3, part 2, accumulated EMP and current EMP analysis. Accumulated EMP is given 36,000. Current EMP is 24,000. So you have positive and negative current EMP. When you've got positive and negative, you have to allocate the current EMP over time. That's how you do it. The question is the EMP earned equally throughout the year or on a specific date? In this problem, EMP was lost equally. This is what we're going to do. We've got the April 1st date. We've got the 2/12/31 dates. April 1st is where we go first. We have accumulated EMP of 36,000. We're going to add to that the current EMP. Here, they lost 32,000. The formula is negative 32,000 current EMP. But remember, it's lost equally throughout the year. So you're asking on April 1st. Everyone's a calendar year in this problem. The shareholders and the corporation. January, February, March, 3 months have passed. So that equals negative $8,000. So 36,000 minus 8 is 28,000. So 28,000 of EMP gets allocated to that date. You're going to see 0 and 0 for this date, for these dates. Because it's been fully, the accumulated EMP has been fully allocated.
So you're allocating on time. Correct.
Well, what you're doing is you're taking the accumulated EMP and then you have to adjust it by the current EMP based on time. And the idea is that because 28,000 EMP is not enough for the $40,000 distribution on April 1st, if you had more, you would allocate the remaining amount throughout the year, the negative, and then you would do it. But because 40,000 would take all of this, there's none left after. So then we go right to our step 3 analysis. Right? Remember we have April 1st. 12/31 decay, 12/31 strawberry.
I'm sorry, why does it stop at 28,000?
Because you take 36,000 accumulated plus a negative $8,000. This is earned equally throughout the year, this $32,000 loss. So every month that you go, a portion is lost.
It's lost. So you don't have to continue it down for every.
Because it's all used up. You only have 28. It's just going to be more negative because you'd have 0 here and it would be minus the remaining amounts. It'd be a negative number. So we don't have any EMP to allocate.
Okay.
You've used up all this accumulated goes in here. It's reflected through this and all this. So then this goes to 0 and 0 because you use all of it up. So this is going to be a negative number. This is going to be a negative number. So I just say 0
Gotcha.
and 0 because we don't really have negative EMP to allocate for purposes of 3. It's just no EMP. Okay. So remember, April 1st, the $40,000 distribution. This is $20,000 distribution. This is a K. It's $20,000 distribution. So step 1, E&P. We have $28,000. This is 0 and 0. These are these numbers right here. So adjusted basis, we have 24. Right? We only need 12,000. 12,000 is return of capital. So that reduces the adjusted basis down to $12,000. Okay, and before we do these dates, we need to know what the basis is. But then we have on 7-1, K sells half to S. So K's consequence is amount realized minus adjusted basis. There's adjusted basis of 12,000 left over. So half of $12,000 is $6,000. K gets $50,000. $44,000 capital gain. The adjusted basis left and the remaining shares equals $6,000. Strawberry takes the basis in the stock equal to $50,000. So when we do our analysis, our adjusted basis left over is 6,000. We've got 14,000. I'm sorry, my apologies. Stupid, 6. $6,000 left. That brings the basis down to 0. We have $14,000 as capital gain distribution. This is going to be all adjusted basis because our adjusted basis equals 50,000. Brings it down to 30,000, and we have 0 here. I'm not going to do the accumulated E&P analysis on here, but I'll explain how to do it. You take the accumulated E&P given to you and the current E&P given. Accumulated E&P given to you is positive 36,000. Current E&P given to you is negative 32,000. You then take the amount of the dividend, which is positive 28. And that would be accumulated E&P next year of minus 28 plus, 28 plus 32 is what, 60? So it's going to be negative $24,000 next year. Yeah. 28 plus 32 is 60. 60 from 30 is 24. So it's negative $24,000 of accumulated E&P going forward next year. If we do this with problem 4, I'm just going to go through. I'm going to change around these numbers for simplicity. In problem 4. Problem 5. In problem 5, it's the same facts. The only thing that changes is that the E&P was lost equally in problem 4. In problem 5, it was lost on a 2-1 sale. So what does that mean? How does it affect everything? This all stays the same, but what happens is the current E&P that's going to be allocated here will be negative $32,000 because all $32,000 is on February 1st, and then April 1st comes after. So guess what? We have a $4,000 E&P amount that goes there. So we bring that $4,000 here. The adjusted basis then gets used in the stock, all 24,000. That brings the adjusted basis down to 0. $12,000 of capital gain because this equals 4 plus 24 is 28 plus 12 is 40. Sell the stock on April 1st for there's 0 basis left. $50,000 capital gain. Adjusted basis left is 0. So that means this is also 0. It means this is 20,000. And then Strawberry stays the same because Strawberry purchased the stock for $50,000. And this all stays the same here from problem 4. If you do step 4 for problem 5, all you do is you take the accumulated E&P given, current E&P given, which again, accumulated E&P is 36,000, current E&P is negative 32,000, and then you take the distribution adjustment, which is going to be the amount of dividend. So it's $4,000. So it brings down your accumulated E&P down to 0. Any questions on that? So that's problems 1 through 5.
Wait, what did you say accumulated E&P next year is? Sorry.
0.
Okay.
So in problem 4, accumulated E&P was negative 24,000. In problem 5, it was 0. So they each get for problem 6 and 7. Problem 6 and 7 are very straightforward, a lot more straightforward because you don't have to do the accumulated E&P analysis. You don't have to do the E&P analysis because you're going to see that there's a ton of E&P, so it's all going to be dividend. So when you have lots of E&P, you don't have to worry about all that because it's all going to be dividend. The big difference in problem 6 and 7 is you have a property distribution. So problem 6, Peachtree has accumulated or current earnings and profits. I'll draw a little line here. No accumulated current earnings and profits. December 31st, distributes to Grape's sole shareholder a parcel of land, basis 90, fair market value 190, subject to mortgage of 140, which Grape assumed. Grape's basis $50,000, consider the consequences. So step 1, amount realized minus adjusted basis. It's the greater of the fair market value of the property or the liability, just like we're doing with liquidation. Similar rule. So the greater of the two, fair market value is 190, liability is 140. Of course, the greater of those two is the 190. So the amount realized is the fair market value of 190. Adjusted basis is the adjusted basis of the property given up, which is 90,000. So the gain, recognized gain by the corporation is $100,000. Step 2, we adjust current E&P by step 1. So the old current E&P is 0 plus the gain in step 1, which is $100,000, gives us $100,000 gain. Step 3, we go through our analysis. Distribution, part 1. The distribution amount, the amount of cash received, which is 0, plus the fair market value of the non-cash property received, which is $190,000, minus the liability of $140,000. The distribution amount equals $50,000. Part 2, the E&P analysis. We've got accumulated E&P of 0, current E&P after step 2 of $100,000. When we have positive and positive of one owner, we add them together and look at that. We have $100,000 of current of E&P. Part 3, waterfall. We've got a $50,000 distribution. Step 1 is to the extent of E&P, we have dividend. We have $100,000 of E&P. That means that all $50,000, guess what, is a dividend. Part 4, the adjusted basis of the land equals fair market value. So that's going to equal $190,000. Step 4, accumulate E&P for next year. We take accumulate E&P given. Current E&P given. Plus step 2 gain minus the distribution adjustment, and that gives us our new E&P. Accumulated E&P given to us is 0. Current E&P given to us, both are 0. Step 2 gain, you take the amount of gain that we recorded in step 2, which is why I use it, because it's easy to siphon through and find this $100,000. Sorry, that's gain, my apologies. This is new E&P, new plus 100,000 minus distribution adjustment is going to be the amount of dividend. Unless it's a property distribution, which this is property. The rule is, if it's a property distribution, you look at the property distributed if the adjusted basis is greater than fair market value. Is the adjusted basis greater? No. 90,000 is not greater than the fair market value of $190,000, so it fails that test. Therefore, we apply the general rule, which is the dividend amount, which is, $50,000. So the the accumulated E&P for next year is $50,000. Problem 7 is very similar, except there's no liability involved. Okay? Step 1, so in this one, got peach tree, grape. You go through step 1, amount realized minus adjusted basis. The amount realized is the greater of the fair market value or the liability assumed. There's no liability here, so it's just going to be the fair market value. The fair market value of the property is $100,000. Adjusted basis is $130,000. Equals negative $30,000. The problem is that, remember, in step 1, the corporation can never have a loss. So what does that mean? No. No gain or loss recognized by the corporation in step 1. Since there's no gain or loss recognized, step 2, no consequences. Step 3, go through our 4-part analysis. Part 1, we do distribution amount. Actual cash received, 0. Fair market value of non-cash property is $100,000. Minus the liabilities liabilities taken on, there's no liabilities. So it's going to be the fair market value of $100,000, the fair market value of property. Okay. Part 2, EMP. We're told accumulated EMP is $140,000. Current EMP is 0. So we've got $140,000 of EMP. Right? Because remember, when it's positive and one odor, you could add them together. Step 3 is the waterfall. Take the distribution amount, 100,000. First portion is dividend to the extent of the EMP, which is 140, so all $100,000 is a dividend. Oops. Return of capital is 0. Why do I keep... Capital gain distribution is also 0. Part 4, the adjusted basis of the property equals fair market value always. So the land received adjusted basis of the fair market value, which is $100,000. Okay. Step 4, we do the accumulated EMP for next year. Take the accumulated EMP given, current EMP given, plus a step 2 gain, minus distribution adjustment. So accumulated EMP given to us is $140,000. Current EMP is 0. No step 2 gain, right? No consequences here. Distribution adjustment. So remember, the rule is if it's a cash distribution, it's always going to be a dividend. If it's a property distribution, if the adjusted basis of the property is greater than fair market value, you're going to use the adjusted basis as a distribution adjustment. So the adjusted basis here is $130,000, which is greater than the fair market value of $100,000. Yes. So therefore, we use $130,000, not the amount of the dividend, which is $100,000. So it's going to be minus 130. Our accumulated EMP for next year is $10,000, and we're done with problems 1 through 7.
Why is there no consequences on step 2?
Because step 1 is 0.
Okay.
Whenever step 1 is 0, step 2 is also 0.
Okay, thank you.
And you can never have a loss in step 1.
The
If you have,
step 1 rule is an anti-abuse rule, correct?
that's correct, yeah.
Okay.
Let's remember it.
That's good.
So that's distributions. What do you all want me to do now?
I had a question. Module 7, how should we practice that?
Yeah.
So module 7 has, it says in the breakdown that there's a certain number of questions that are conceptual and a certain number of questions that are computational. I think it's 4 or maybe 2 and 2 or some type of breakdown like that. Basically, as I've said in class, any example that is in the problem, in the PowerPoint, practice that. I'm not going to test you on any other types of calculations other than what's in the PowerPoint for that module. But the conceptual questions involve the PowerPoint as well and stuff we mentioned in class, but the conceptual questions are pretty straightforward and definitional and related to that material. So I think there was maybe 3 or 4 different examples of computational stuff on the Module 7 PowerPoints. There was an example related to timing issue, specifically when you have like an accrual method corporation, a cash method taxpayer. That was an issue. That was a calculation question, technically, because it had numbers. there was dividend received deduction, there was organizational expenditures. So all of those are fair game for calculations. And if you go through those and practice those, you'll be fine, which there's a video in case you want to go back over them. Again, the conceptual aspect too, so go back over the PowerPoint, and again, there's a video on that as well. So that's module 7.
Kind of like wealth transfer tax, like that type of setup for the problem.
Yeah. Except wealth transfer, I gave you all some practice problems. This, I don't have any practice. I would just, so again, even more so than even that,
Okay.
where just focus on the problems in the PowerPoints, nothing else. Don't waste your time thinking about any other stuff. Because that module is like a very large, I mean, that topic in tax is a very large topic, but the stuff you need to know for this exam and the CPA exam is like, okay, you learn individual tax, kind of like what's different. What's different? That's like the main thing. So that's module 7.
That's like NOL too, right?
Yeah, we talked about NOLs, but I don't think I had a problem on it. There's a dividend received deduction that involves NOLs, you have to worry about that. But yeah. So that's module 7. We talked about module 8 distributions. What other topics would you like to talk about? Or would you like me to go over problems?
Can you just review the rules for the redemptions?
Sure. Let me pull up the checklist.
Is there a quiz for module 9?
Mm-hmm.
Could do that. I did. I gave him my summary for it. Yeah, I was like, I got that book and I was like, advanced accounting, really? It gets worse. Like, no, I'm kidding. But like, I think consolidation was the hardest to me. Forex and hedging was the most fun.
All right.
It's just tedious.
So remember that redemptions,
Get some sleep.
what you're doing is you have the corporation is buying back a shareholder's stock. So under general tax rules that we've been focusing on this semester, it's a property transaction, right? It's a sale or exchange of stock. So we're looking at the shareholder in this class. There are consequences to the corporation, but you don't need to worry about that in this class. Just the consequences to the shareholder. That's what we're focusing on. That's what the CPA exam really focuses on as well. You have 2 options, right? So on the exam, you'll either be told it's a redemption or it's when a corporation buys back shares of its own stock from a shareholder. That's how you know it's a redemption problem. 2 options: regular sale or exchange treatment or distribution treatment. The way you go about is if it meets one of the 4 tests. Here's the 4 tests. So redemption is substantially disproportionate, complete termination of a shareholder's interest, partial liquidation, or the redemption is not essentially equivalent to a dividend. The first and fourth tests are the most important ones. You go in order, because the first test is the most mechanical objective, and the last test is the least objective. It's the most subjective. So you go in order. If you meet any of those 4 tests, it's a sale or exchange. Amount realized minus adjusted basis gives us the realized and recognized gain or loss. But if you don't meet any of the 4 tests, it's a distribution, and you go through the 4 parts of the distribution rules. Another thing to note is that if you have a sale or exchange, the remaining adjusted basis of the property of the stock left, because you're not, in the examples that we had, the shareholder didn't redeem all their shares of stock. They still had some remaining. If it's a sale or exchange, the adjusted basis of the shares of stock left is just whatever it is, right? If it's $900 per share before, it's $900 per share after. However, if it's a distribution, you have to reallocate the basis so it will go up, right? So if you have a $27,000 basis and 30 shares before, and now you have 25 shares, you have $27,000 divided by 25 shares, not 30. So it's going to be more than $900 per share. You have to recalculate it. So we saw that in the examples. And the YouTube, in the module of the problems, the YouTube problems, they go through it. So looking through the rules, remember that you have to consider attribution. Now, the only attribution you need to focus on in this class, and the ones they tend to focus on for CPA, are family attribution, right? You're looking at the party that's being redeemed. If they have any spouses, children, grandchildren, parents, that own stock, you have to include that as well. We saw that in problem 2. Remember orange, lemon, lime, cherry? We saw that in there. The other types of attribution you don't need to worry about. So again, you've got a redemption. First thing you ask, does it meet any of the 4 tests? First test you go to, substantially disproportionate. There's really 3 different tests that have to be met, but in this class it's really 2. After the transaction, shareholder has to own less than 50%. Not less than or equal to, less than 50%. The other requirement is after the redemption, the shareholder has less than 80% times the before percentage. If you have both of those, it's treated as a sale or exchange, and you calculate the amount of capital gain, capital loss, you're done, right? Because the remaining shares is just whatever it is per share because it's just proportionality. But if it fails, you continue. So problem 1, we went through, right? That was the one with mango and blueberry, right? Mango and blueberry, I think that was the name of the parties, right? Yeah, mango and blueberry, where it was all about substantially disproportionate. The last one had not essentially equivalent to a dividend, right? D. But mango and blueberry, we saw that problem focused on specifically substantially disproportionate calculations. So if you don't meet test 1, substantially disproportionate, you go to the second test. In this class, you're not going to have the second test in an example, but you do need to know what it is. It's the complete termination test. So the complete termination test says that after the redemption, you own directly 0%. Now, indirectly, you can have somebody like an attribution have ownership, but you have to have a waiver of family attribution rule to apply. It's the only one of the 4 tests that you can get waiver of family attribution to apply. Special rules. That's all you need to know about that. Third test, just know what the title is. It's the partial liquidation test. That's all you need to know about it. Not very heavily tested on the CPA. Don't really need to know it. And the reason why I don't really test the second one is it's pretty straightforward. After, you have to have 0% ownership, and the only way you can get around it is if you have family members and they waive their attribution.
What's the consequence of family attribution again? What does it say?
It's the only one of the 4 tests where if you have family members that own stock, you can pretty much waive their rights. So if they create, so let's say you have a family member that you have 2 shareholders, right? And husband and wife, well, that's probably a bad situation. Grandparent and grandchild. Grandparent sells all of his shares of stock. So before, let's say it's 50-50. Grandparent sells all of his shares of stock back to the corporation. So direct ownership, 0. After, grandchild now owns the corporation exclusively. If they're able to do the waiver of family attribution rules, guess what? You meet the requirements. You don't meet requirement 1 because substantially disproportionate, you need less than 50%. You indirectly have
No, but what's the consequence of family attribution?
the consequence of family attribution. You don't have to include your family's certain family members' shares of stock.
Okay.
So that's what I'm trying to show you is that in that situation of the grandchild, in situation 1, you can't waive family attribution, so you're still always going to meet. You're never going to be able to get the first test.
Oh, okay.
But the second test is the only one where you can do it. So you're able basically to say, yeah, the family member owns stock, but they're going to waive, and then you have to meet certain things, but you don't need to worry about them in this class. So, but the only way you get complete termination is if you have 0 direct ownership after. That's the only way. So that's basically, people always ask, well, if you have 0 ownership afterwards, wouldn't you qualify for all these tests? You would. You'd qualify for all of them. You wouldn't have anything. So really what the test is if you have 0 direct and you have indirect ownership but you waive it, this is the only test you can get out of it. That's the only way you can get out of it. So to answer your question, the effect of waiver of family attribution means that you don't have to include their ownership in certain cases. So it'd be 0 plus 0. Well, you get sale or exchange treatment. You qualify as a sale or exchange, which again, that's what most shareholders are trying to get, is sale or exchange, unless you're a corporate.
You don't want to include your family.
Yeah, so you don't want your family in it.
Well, you could, yeah, you can include your family in some cases and get another rule. So
So like, let's say you get like grandfather's like Coca-Cola like stock. Like, do you want to have that ownership? I guess you don't want it for your tax sake, correct? Because you then have to pay extra taxes on it. Like, I'm trying to think like a very broad layman's terms definition of what family attribution like affects.
it's going to the test of whether you meet any of these four. If you meet one of the four, you get sale or exchange treatment. If you don't meet any of the four, you get distribution treatment. Generally speaking, taxpayers want to get sale or exchange, unless you're a corporate shareholder but if you can meet another one of the four tests without family attribution, you don't want to do family attribution because it makes the family member have to do things. And again, you're kind of asking me to, again, what I don't want to do is going into what family attribution, what you have to meet. It says it right here.
Okay.
It says it right here. A family attribution means immediately after redemption, distribution shareholder retains no interest in the corporation other than a creditor. So there can only be a creditor. A shareholder must have no interest. Shareholder does not acquire such interest, has to file a agreement. So you're going to have to pay some attorney or accountant that $10,000 to file some type of thing for you. So you don't want to have to do this if you don't want to. I mean, if you don't have to, you can get it other ways. If you can get one of the other tests. If this is the only way to get around it, so you get sale or exchange and you do want it. Well, it's the only way you can get out of, it's the only way that you basically can get out of, it's the only possible way to get out of attribution. Because you're going to be attributed your family member's ownership if they're one of those family members.
Well, like an aunt or an uncle doesn't count, correct?
Well, grandfather doesn't count either.
Grandfather doesn't count. Okay.
Grandchild counts. So if a grandchild has their shares redeemed, you don't get to add on, you don't care about the grandfather. You care about the opposite. You care about, if a grandfather redeems, then you care about the grandchild. Spouses, yeah, back and forth. Parent-child, back and forth. But grandchild to grandparent, no. Grandparent to grandchild, yes. But I'm not going to test you like on that, like a grandparent, grandchild. I'm not going to do that one. That one's like, students will get it wrong. I do more of the parent and the child one because that one's easy to understand. It's back and forth. Or spouses. And that's usually what you see on the CPA exam, those. Yeah, aunts, uncles, brothers, sisters never qualify.
So distribution is bad.
Unless you're a corporate shareholder. But they don't have family attribution. Well, they do. They do. They don't have family, but they have indirect ownership attribution through other entities. But we didn't talk about that. It's in the slide, but we're not going to talk about that one. That one's like more technical. Yeah.
The index cards for the exam, so they have to be handwritten, right?
Yes.
Okay, can I ask why?
Because students will print 0.5 size font, and then they'll try to come in there. But can I bring a magnifying glass? Can I do this? Can I do that?
Oh, okay.
Yeah.
My macro professor did that, and he didn't specify it so you could print it out.
So people bring magnifying
Critical
glasses?
thinking. Not even that. Like he didn't specify. He'd be like, you can bring in like a cheat sheet so long as it's like smaller than smaller than the size of something really random. But he never said the size PT font. He never said handwritten. He never said anything like that. So you could work your way around and bend and flex the rules. And I remember like typing up like a thing like that big. Like it was like this big, but it was like all handwritten typed, like 10 PT font. Just bring in reading glasses. You can literally go to the dollar store and buy reading glasses like if you need it. Like.
So
Not giving anyone advice. I have a prescription, but I'm just saying. I'm blind. That's why I'm sitting right here.
So the fourth test, not essentially equivalent to a dividend, is the last one you want to check. And with that one, basically there's two things that we learned in class. And they basically, as long as you study the examples that we covered, you're good because this is a very subjective one. The key to not essentially equivalent to a dividend is you have to have a meaningful reduction of the shareholders' proportionate interest in the corporation, which they focus on voting power. So the first example we saw is when somebody owns more than 50% and they go to 50% or less. So we also saw that, remember, because a substantial proportionate test, it has to be less than 50%. So if you're equal to 50%, it's not going to work. So you're going to go all the way to NEED. Remember I told you that if any shareholder owns more than 50%, you're never going to get any of these 4 tests. Never. So that's something to keep in mind to help you for the exam, the CPA exam. Always. That's always the case. Because the idea under tax law is you own more than 50% and you look at voting power and you can control. So if you go less than 50%, it doesn't matter how many owners you have. You're good under NEED. Or under substantially disproportionate. Either one, depending, but you have to meet the 80% rule too. That's why it failed in problem 2, the 80%. That's for any number of owners. But if you equal 50% and you have, remember how we saw, I told you in problem 1D, there was 2 owners, right? Mango and Blueberry. They went, Mango goes from, I think it was Mango, it might have been Blueberry. Whatever owner goes from 70 shares to, now they're at 30, right? They had 40 redeemed, and then it goes from, now they have 30 out of 60 outstanding. So they go from, more than 50%, exactly, 70% to exactly 50%. And I told you, okay, it fails substantially disproportionate, but it meets NEED because there's a revenue ruling that says that when you have 2 owners and you go from more than 50% to equal to 50% or less with 2 owners, that's considered NEED. But if you have more than 2 owners and it's equal, it would not equal because the idea is that you can still get with someone else. But if you're less than 50% and you have more than 2 owners, then it is considered NEED always because, again, you don't have the ability to do the issue. Like I showed you the example, right, when you had the 4 shareholders, right? Orange, lemon, lime, and cherry. I showed you how it would work if you had 50. You could get cherry on the fence, right? But if you have 2 owners, 50-50, you're not going to get the other party ever to go on your side. So that's why it makes a big difference. Okay, so that was the first scenario. The second scenario is the concert scenario where that one just look at the problems. Look at problem 2, the later part. I think it was C. No, I'm sorry. It was D and E. That was the concert issue. That's where, remember, Orange, unrelated party of anybody else, could team up with anybody, and then afterwards couldn't team up with anybody. And then Cherry could team up with Orange, but then lost that ability, and we said that was considered NEED for both. So again, if you have any of the 4 tests, it's treated as a sale or exchange. So the problems in the exam could ask, what's the amount of distribution? What's the amount of capital gain, capital loss? Right? If it's asking for capital gain, capital loss, it's distribution, it's 0. If it's asking for distribution or dividend, and it's considered capital gain, capital loss, that's 0. Or it could be the amount you calculate, whatever it is. And then remember, you have to recalculate the basis of the shares if it's distribution, but you don't have to recalculate it if it's a sale or exchange. And that's Module 8. So we've gone through Module 7, Module 8. Do you have any other questions? We did Module 9 today. We finished it up, right? We did problem 1, 2, and 3, so you've gone through those, right? So go back and revisit that. That should be fresh in your mind. Module 6, I'll just talk about. So Module 6, as long as you go through and focus on the problems, you should be in good shape. Honestly, for all the problems in the exam. Module 6, Module 8, Module 9, just focus on the problems and the checklists. Module 7, go through the PowerPoint and go through, of course, any examples that I went through in the PowerPoint. But again, Module 6, 8, and 9, you really want to spend your time focusing on the problems, but also looking at the checklist because there will be a few conceptual questions. So if you're studying the checklist while you're doing the problems, you should be in good shape. Module 6 is formation, by the way. There was only 4 problems that we did. If I did any variations, make sure you look at those variations. Because I could do a similar thing to the variation on the exam, where I test you on the variation that we talk about in class. And the variations, by the way, are on YouTube. They're also in the quizzes as well. They're in both of those. Do you have any other questions? Did you have any specific questions on Module 6?
Majority of the questions are coming from which modules? I haven't seen the breakdown.
It's pretty equally weighted in terms of modules. I mean, modules 7 and 9 are the least tests. I think Module 7 is the least. I think I want to say of the 33 questions, I want to say like 12 to 14 are from Module 8. I want to say like 10 or 12 are from Module 6. I think 4 from module 7, and then like 5 or 6 are from module 9. It's something like that. Don't quote me on that.
Wait, how many questions?
There's 33. Yeah, all my exams are 33 questions.
And one of those would be you get a free point or something, free question.
I just give 1 free point because it's out of 99 points.
Okay.
Because each question's worth 3
Okay.
points. Yeah. I just come to realize that in 2 hours, so I feel like an hour and a half, because the length of the questions, in my opinion, are similar to like what the CPA questions are like. Some of them obviously are going to be shorter on the CPA, but so I kind of like go in a middle approach because some of them are going to be longer on the CPA. I've come to realize that it should take you probably about an hour and a half to do 33 questions. So I give like kind of like a 30-minute buffer in case something happens or whatnot. You know, Sue might show up late or something, or you get confused on a question. You sit there for 10 minutes looking at it. I don't know what's going on. So that's why I do only 33 questions. And also it makes it easier to, it's like a whole number, right? It's not going to be like a 0.5 or whatever if I do like 40 questions, right? 2.5 each. $25 is not enough to cover everything, I think. And I think somewhere between 30 and 40 probably is enough to cover most of the topics.
I would put so much weight on one question than if you did 25. Like if you just, if you don't understand one little part, like it'll mess up your score a lot more.
Yeah.
If you have one question.
And you won't combine modules like shit anyway.
No, I don't do that.
Good question.
No, I don't even do that in the final exam. So the final exam has some cumulative questions, but I tell you what the questions are. Like I'll tell you like what, there's like a document that's already posted on Canvas, it's been posted at the beginning of the semester, and it tells you like what, go back and review this problem. That's all you need to do. Don't worry about anything else from other than what's on that document. And I actually have the problem again, and I like give you like a solution to review. So if you just study that document, you should be good for 8 questions on the exam. No, 7. No, 8. 8 questions.
Do we still have a note card for the final?
You get 2 note cards in the final because of the cumulative part of it. Any other questions?